All right. Back to work tonight, guys and gals. Tuesday evening already. It's April the 13th, 2021, of course. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us get ready to capitalize on the best setups for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. We got the S&P, got the Nasdaq, and we got the gold on our radar for tomorrow. Speaking of tomorrow, boy, I would love to buy some of these pullbacks right now. Gold going higher, Nasdaq going higher, S&P going higher. I'd love to buy a pullback, maybe a couple pullbacks tomorrow across our favorite markets. And in tonight's video, I'll talk about my three favorite places to buy that pullback. Couple different scenarios I want to make sure we're all ready to capitalize on for tomorrow. So by the end of this video tonight, you'll know exactly my plan to both buy and maybe sell a little bit tomorrow morning in our trade room. Before we jump into the video tonight, though, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. We publish this video newsletter with our best trade ideas every evening. So make sure you subscribe to this YouTube channel so you don't miss tomorrow night's video. And if you guys have any questions for me, drop those questions in the comment section. I would love to get all those questions answered. And if you enjoyed the video, don't forget that like button, that thumbs up button here if you guys enjoy the video as much as I enjoy making it for you. But enough of the intro, though. Time is ticking. Wednesday is right around the corner. Nothing but bull markets here on the charts, you'll notice here, right? S&P, of course, is bullish. Nasdaq is bullish. Gold is bullish after that reversal off the overnight lows. I'd love to buy a pullback, right? Would love to buy a pullback on the S&P, a pullback on the Nasdaq, and a pullback on the gold. But I'll tell you, looking at these charts tonight, there are probably three different kind of scenarios I want to be ready for tomorrow, whether we go up, we go down, or we go sideways. We know we're bullish right now. I'd love to be a buyer, but I don't want to be buying way up here, right? I'm not buying into these highs, buying into these highs, and buying into these highs. So we'll talk about those three particular setups, those three scenarios I'll be watching for in tomorrow morning's trade room. Before we jump into these charts, though, let's make sure we take a quick look at the schedule for tomorrow. We don't have much major news tomorrow. Tomorrow, of course, is a Wednesday trading session. As we get closer to Friday, don't forget Friday is OPEX, the third Friday of the month. We'll worry about the plan for OPEX a little bit later on in these weekly newsletters. But of course, tomorrow being a Wednesday, April the 14th, you'll notice we don't have a lot of major news. There is some news here. We got some import-export prices. Probably not going to have too big of an impact tomorrow. We got the oil report at 10:30. Probably not going to have much of an impact tomorrow. Really, the big variables tomorrow are going to be in the afternoon. You got Jerome Powell speaking at 12 o'clock Eastern time. Another one of those virtual summits where I don't expect him to have that big of a market impact tomorrow. He might, right? He might. The head of the Fed is always somebody we want to watch. I focus my trading in the morning session. So my trading is usually 8 o'clock to 11:30 Eastern time, Monday through Friday. If you are hanging out over lunch, be aware of that. He may say something that may surprise the markets, and that may give us, something to work with here over the overnight session. And then, of course, the Beige Book tomorrow afternoon at 2 o'clock Eastern time is another potential market moving event. I'll tell you, none of these, though, really get me that excited. None of these really, nowhere near as important as that CPI report we saw today or the retail sales number that we'll get tomorrow. So we're pretty much a wide open market here for tomorrow. Again, I know it seems like Jerome Powell should be a big deal tomorrow, but I doubt he's going to say anything tomorrow that we haven't already heard about a dozen times from him and the rest of his crew over the past few weeks here. So whenever we don't have any major news on our plate, lately the best trades have been between 10 o'clock and 11 o'clock Eastern time. Now, of course, we'll always be getting together every morning, 8 a.m. Eastern. We'll trade together in the trade room. We'll be looking for setups throughout the entire morning tomorrow morning. But generally speaking, when there isn't any major catalyst, right? Like, again, major catalyst today, major catalyst tomorrow. There's no really major market moving catalyst on our radar right now that we know about, at least. And so because of that, I would assume, if I had to guess tomorrow, opening bell at 9:30, when things settle down by 10 o'clock to 11 o'clock. That lately has been when the best setups have been coming. But, again, we'll be watching for whatever we can get our hands on. Again, would love to buy some pullbacks. And as always, we'll get together tomorrow morning in our trade room, 8 o'clock Eastern time, and we'll take whatever the market gives us. So no major news on the calendar for tomorrow, but that comes to an end on Thursday. Lots of news on Thursday. And, of course, busy OPEX on Friday. We'll talk more about details of that in tomorrow night's newsletter. Let's get back to our charts, though, here for now. Everything is bullish. S&P's bullish, Nasdaq bullish, and, of course, gold is bullish across the board here. Let's jump first here into the E-mini S&P. S&P, of course, running higher here. If you watched last night's newsletter, we talked about this trading range, right? We talked about selling high and buying low. The buyers got a nice gift off of that triangle low we talked about in last night's newsletter. They took advantage of that with a nice 1, 2, 3 reversal, and we have the buyers in pretty much in full control of this market right now. You'll notice there are a couple ranges on this chart, right? A small range there around 930, and of course that range from yesterday. Those will act as price magnets. Now, again, we know we're bullish. Lately, we've seen a lot of these strong spike ups, right, into trading ranges. That's one of the 3 scenarios I'm watching for tomorrow. I would love to see a nice deep pullback to low of this channel. And at the same time, I wouldn't be surprised if the party continues and we see a break going higher. So, tonight in this video, we're kind of talking about these 3 different scenarios. Do we go higher? Do we go lower? Do we go sideways? And that's pretty much what I'll be getting prepped for here tomorrow. So, for example, if we do get that pullback, if I get a pullback here right now, I've got a great spot here combining the low of this channel, the high of that prior high. That range, of course, will also act a little bit of a magnet, right? But as a support level here. So I would love to buy a pullback off of this low. Now, of course, I'm not just going to try to pick a bottom on that. What I'll do is I'll wait for the pullback. I'll wait and see if I can get sellers to commit off the moving average, and I'll look to use their stop losses as fuel for what is called a failure into pullback combination. We see a lot of these kind of combination setups every morning in our trade room. Again, we're bullish. I would love to buy a pullback, would love to find a support level to combine on this. Can we get down into these lows? Can I get those bears to foolishly try to get short in a bull market? A lot of strength here for the bulls. The odds are we go back up to retest that high. All of those stops will be sitting right above those highs. I can buy right into those stop losses. I can look for that pullback off the moving average before we go back up to retest the high. A failure into pullback combination on that pullback to the low of that trading channel. Now, another scenario to watch for tomorrow is if the market goes sideways, right? Let's say we do end up going sideways here. We've seen a lot of this recently where we see these, well, you can see it right here, jump up into a range, right? We had the same thing happen earlier on in the month, right? Jump up into a trading range. So would not surprise me if we jump. We got Powell tomorrow at 12 o'clock. I know I don't expect too much out of him, but that definitely could be a reason for these buyers to kind of tread water here for a little bit. So if we do end up going sideways on the chart here for tomorrow, the plan doesn't change a lot. But remember, anytime we have a bull market into a trading range, the key is you want to find support levels underneath that trading range. You want to wait for that pullback, and then again, just simply wait for those sellers to try to get short off the pullback and just buy right into those stop losses, right? A very, very simple plan of attack if we go sideways here on the S&P tomorrow. The last scenario would be if the market now starts to make a run going higher, and this one's actually pretty easy. We know where the measured move extension will be. We know where We know where these buyers will want to go. So if they don't give us the pullback, we'll adjust that measured move. So if the market, for example, just makes a run higher here, how do we trade that now? Well, what I'll be looking for is a new bull channel. So if you kind of get rid of that channel here, just bear with me for a second. If we do end up running higher here, it's a very easy play at that point. I'm going to mark up my channel off the highs. I'll bring it down to that low, and I want to buy off of that low. And what I'll typically look for in these scenarios is, again, get underneath the moving average, get those bears to get short off the EMA, and simply just use those stop losses for a failure, into a pullback, into a strength, into a trap, right? We have so many ways: failures, pullbacks, strength moves, right? Trap setups on the way up to that measured move. And guys, keep in mind, right? These failures into pullbacks, into trap setups, I'm just kind of glossing over them right now to keep the video relatively short, but I go into a lot more detail of all of these specific entry triggers that we use. So when we do get these patterns, you'll know how to capitalize them. I go over all those details in our free trading course here at School of Trade. If you want a deeper dive, if you want to see a lot of examples of how we use these failure patterns, these pullback setups, these trap setups, right? Whatever we talk about tonight, I'll go into a lot more detail in that free course. So grab the little link that popped up there in the upper right hand corner. That way the next time I say 1, 2, 3 breakout into hidden channel pullback, you'll know exactly how I'll be trading it, right, every morning in our trade room. So those are the basic 3 scenarios I'm looking for here on the S&P. Do we get that pullback with that failure? Do we tread water and get that pullback and failure? Do we end up running higher, find that new channel, right, and buy that pullback, right, using, again, failure patterns, pullback setups, right, traps off the low of that hidden channel? So definitely on my radar here for tomorrow. Now, you might be wondering right now, how do we sell this market? Could I sell this market short? I definitely can. I'm at a turning point right now. I'm at a measured move, right? I would never want to sell a bull market in the middle of nowhere, but because we are at a major turning point here right now, excuse me above that, right, I have no problem looking for a short trade. The only problem we have right now is a lot of bullish momentum. So we're definitely at a good turning point here. That looks great. What I'll do though is I'll have to give the buyers the benefit of the doubt on this, and I'll have to let them try a couple times, right? Let's say, for example, the buyers try once and they go lower. They try twice now to go higher. I draw a trend line off that low, off of that high, right? And that would be a great spot to get short. What we're doing on this is we're giving the buyers the benefit of the doubt here, letting them try once, letting them try twice, and oftentimes what will happen is you'll see this big juicy red candle, right, come off the top of that channel, and that is your signal to hit the short side, going back down into that trading range. This is what I call a failure pattern, but it's more of like it's a more conservative kind of variation, right? We call these nested failure patterns because, again, it's kind of a failure inside of a failure. So that is one way I'll be looking to sell off of these highs for tomorrow, these nested failures. Another way would be, let's say, for example, we get the pullback, right? The moving average comes over and the bears actually hold that pullback. That's called a 1, 2, 3 reversal pattern in my strategy. And so, of course, when I get that 1, 2, 3 reversal, that turns momentum now. I would imagine at that point there'll be a big bullseye right on that low at 41.01 and a quarter. And of course, at that point, I'm going to mark up that low. I'm going to mark up that high, and I'll be looking for the first pullback off the high of that channel. Now, again, as always, I'm not going to just simply blindly sell the top of that channel. My 2 favorite entry triggers to short those tops will be bull traps and, of course, buyer failures. Failures then oftentimes lead into pullback and then strength combinations. We'll talk more about those particular entry triggers in the free trading course that I mentioned in the upper right-hand corner. And of course, we'll trade this stuff together tomorrow morning in our trade room. So that's the basic idea for tomorrow on the S&P. Relatively straightforward idea here. Would love to buy a nice deep pullback right around that area of support here. We'll see what we get. Don't be surprised, though, if we end up going sideways here with Jerome Powell on the microphone tomorrow morning. S&P looking pretty good here. Nasdaq is in a very similar situation. Nasdaq, of course, finally broke through its all-time highs, right? So going to play and catch up there as well. The Nasdaq, you'll notice, is a little bit different, right? But it's very, very similar here to the S&P. We know we're bullish right now. There's definitely not a bear market here. I want to buy at an area of support. And, really at this point, it just kind of comes down to, do we pull back? Do we go sideways? Do we keep popping higher? I could easily see this market continuing up to that 14,060 measured move for tomorrow. So that would definitely be on our radar here. So how do we trade a situation like this? What about the pullback? Well, as always, right, I want to find levels of support. I've drawn my trend line off the high. I've got my trend line off the low. This might be a little bit tighter, right? It might be a little bit tighter there, right? Line of those lows there. So, again, it might be a little bit tighter like that. I do like this one a little bit lower, a little bit better here. Honestly, it's not going to make that big of a difference. If I can get down into this area here, that's what I want to see. I want to see us get down into a support area, right? Give me some nice risk-reward ratio baked in on that pullback. Can I get down into those areas of support? Can I get those sellers to foolishly try to get short off the moving average, right? It'll look like this, right? It'll pull back, the bears try, and we can sell into those stop losses. That's exactly what I would love to see, again, off the low of this channel, right? Off this kind of prior high turns into a level of support. If I can get that, right, if I can get that failure, I can go failure into pullback combination, right, with that retest of the high, right? So relatively simple idea there. If I can get the pullback here on the Nasdaq, right? Failure into pullback combination. And then as always, right? As always, if we do go sideways, not a lot changes if we go sideways, right? We're still bullish, obviously. The range, if we go sideways, will act as a magnet. What do we do in a range-bound market? We find levels of support below that trading range. We wait for price to pull back into those areas of support. That range above acts as a magnet. We wait for those bears now to come in and get short off the moving average, and we can buy right into those stop losses, literally using those stops of those sellers as fuel to run the market back up to retest the high, right? A good example of a short squeeze or a short covering rally. We can use those stop triggers, right, to rally this thing back up to retest those highs. One thing you do want to be aware of if the market does go sideways is as this thing starts to run into the low of that channel, a lot of times you'll see the market do something like this, right? Where it'll basically keep going sideways and then it will pull back, right? So if you're wondering, can I still buy it right there? You can, and we'll talk about this on the gold. The gold's in a similar situation to this. But if it does go sideways and then runs into the low of that channel, what your concern at this point is you're buying too high. And so the best way to avoid buying too high is to use a trap entry, which of course is one of my favorite entry techniques around the edges of channels, the edges of ranges. They're called traps, right? Look for that trap entry below that low to avoid buying too close to that overhead resistance here, right? We want to try to get as low as we can on these pullbacks. So if we do end up chopping around, going sideways, I'll be keeping an eye out for that trap entry set up just underneath that range and again around the low of that channel. And again, these traps are really, really common. So make sure you grab a copy of that free course I mentioned earlier. You'll get a lot more deeper dive into all my favorite entry triggers. Traps are definitely one of them here. And then what if we keep going higher? If we keep going higher, we get that measured move overhead. 14,060 is that measured move. Now, there's a couple things that you would think about here. Let's get rid of that channel here for a moment. Let's say, for example, right, this market now really blasts higher, right? Really blasts higher here. Mark that high, mark that low. And again, we're not going to blindly buy it, right? Look for those failure into pullback combinations coming off of that low. A really, really easy way, right, to buy those lows. Again, we're not trying to predict the bottom. We're not trying to pick the bottom. We wait for those bears to get roped in, buy into those stop losses, buy that pullback, and hopefully we can do that before we get up into that measured move. Now, another scenario to watch for here would be if we make a strong jump higher. Let's say we see a shallow pullback and a higher high in price. If I can get that pattern set up, watch for a trap off of that low, and extra bonus points if I can combine the low of that channel. Beautiful setup. One of my favorites if the market runs higher. Again, this one will generally be if we see the 1, 2, 3, again, just mark up that high, mark up that low, and it's that failure into pullback, right, combination off of that low. If we get something like this where it does run higher and then as it's trying to pull back, it goes again, that's usually the giveaway, right? You don't get that deep pullback you wanted, right? I want the deep pullback on this. I don't get the deep pullback. Instead, I get this crummy little shallow pullback, which of course drives all the buyers nuts because we're all trying to buy as low as we can because you got the measured move right overhead here. So what do, right? You mark up the highs, you mark up the low, and you wait for that trap, right? That trap will always be something, right, on my radar there. Love to buy traps off the low of that channel. So I think we got a pretty good plan here to be a buyer, right? Again, if it does go sideways, we know wait for the range, look to buy underneath that trading range. Those failures, those pullback combinations, just keep the pullback out of the middle of that trading range, right? We want to stay out of the middle, buy low at support, below the range, use those failures, those pullbacks, those traps, right, depending on how tight we are around that range middle. And then last but not least, how do we sell this market on the Nasdaq tomorrow? Getting short, the biggest problem right now is we're not at a major turning point. You know, the S&P is, right? The S&P is right at that big measured move, right? So the S&P, I feel okay with looking for a reversal. That's going to be one of the harder parts here on this Nasdaq right now. Now, whenever we're not at a major turning point, I tend to be a little more selective with my reversal patterns. So, for example, where I would normally be looking for a one try, two try, and then just simply trading off, right, that trend line for a two try nested failure. In a situation like this, it will be better off to wait for what I call a crown reversal, right? Little bit safer entry, same basic idea, right? Give the buyers the benefit of the doubt. Let them try once, let them try twice. That would be that kind of reversal pattern. You know, again, though, we're not at a major turning point right now, so that's not going to be as reliable of a setup. The other way to do it is wait for that strong move down. Look for that moving average coming over. Bears hold the pullback. And again, remember, we're not selling the first pullback here, right? We're not selling that first pullback. That first pullback is not very reliable because oftentimes it'll go down. The bears will come over. They'll try to get short. They'll fail. And, you know, guys like us, guys and gals like us, right, we'll be looking for that buy going right back up into that trading range. So I'm not going to take that first pullback. But if the bears, if they can hold that move and go, that's that 1, 2, 3 reversal, right? I don't care what direction I trade in. I'm just not going to try to pick a top on this, right? That's the big thing. I will wait for that 1, 2, 3. Once I get that strong jump off the moving average, and keep in mind, right? Didn't get it there. So don't be too aggressive at trying to predict these reversals, right? There's more money lost trying to anticipate anticipate a reversal than just simply riding the momentum of the market, right? I don't want to hear, well, we're so overbought, we're so high up. It doesn't matter, right? That is just, those are arbitrary numbers. This market can keep on going as long as it wants here. I am not in a position to pick a top on this market, right? So wait for it. 1, 2, 3. Once I get that momentum turning, now we know there will be a big amount of bears coming in for that first test off the high, right, of that channel. Now, my favorite entries are always those traps, right? So trap high for the entry up there, right? Another one I like to use is that failure pattern, right? We go up, get above the moving average, buyers come in, they try to buy the pullback, right? It's a failure into pullback combination, right? So again, we'll cover more details on these specific entry triggers in that free trading course that links up there in the upper right-hand corner. But those are the scenarios I'm looking for here to get short on the Nasdaq. Again, be careful trying to pick a top on this market. It does look like we might be in store here for a bit of a sideways chop in the overnight session. So watch out for that trading range. Keep your eyes on the move going lower here. And if we do see it break out, you know the breakout patterns, the moves higher, and the setups I'm looking for here as we try to complete that big measured move overhead. Nasdaq is looking pretty good. Again, they're all pretty straightforward here as far as what the plan will be for tomorrow. Gold is a little bit of a curveball, not that much different. You can see right now in the gold, we are range bound here with a bull bias. You can see that nice big bull run higher, right, into lower highs and higher lows. You can definitely tell there's a range forming on this chart right now. Now, this range may not last very long. There's a couple things that you can kind of see on this. One would be, of course, I would love, whenever I have a triangle on the chart, anytime I have a triangle on the chart, the money is made underneath the triangle, right? That's where if I had it my way tomorrow, that's where I would get this entry down inside that battle zone, right? You've got that prior high, that prior swing low. Again, it's the edge of that triangle. So, if the market does pull back here for us, my go-to setup will be like I've talked about already, a bunch of times already, right? I'm not going to try to sell it, that's for sure. And I'm not going to try to pick a bottom on this. What happens is you'll buy that bottom, they'll come over, they'll stop you out, and then they'll run it higher. We've all been there before, right? You try to buy the bottom of the move, you get a little bit of profit out of it, you put your stop below that low, and sure enough, they come over, they stop you out, and they laugh at you while they're running higher, right, without you here. So to avoid that problem, I don't try to pick that bottom, right? I wait for the bears to commit, then I know exactly where those stops are. We know there's a range magnet overhead. We know we have a lot of bullish momentum. There's a very good chance this market ends up snapping right back up to retest those highs. So this is a very, very easy setup here. Just got to wait for it. That's all, right? A failure pattern off of that low, right? So if we do get that pullback, failure patterns to snap back up into the trading range or complete that rotation back in the opposite direction. Now, one of the interesting parts about this is we may end up, of course, going sideways here. There's a couple things that you should be aware of if we go sideways. First of all, if we simply go sideways into a rectangle, we kind of already know that plan, right? What do? We find levels of support below. We wait for price to pull back. We don't try to pick the bottom. We don't sell this thing, that's for sure. And we wait for the bears to commit. Once they commit, we know exactly where the pain points are, and we can buy right into those stop losses. A very, very easy way to trade a bull market into a trading range. One thing you want to kind of keep in mind is like I mentioned earlier on the Nasdaq, I think it was, we may also simply trade sideways here until we run into this channel low, right? What happens a lot of times is you'll see the market start to climb and it will break out, right, off the low of that channel. What's my challenge right there? The challenge is we're buying relatively high, right? So the best pattern for me to use in this situation would be to use a trap. So imagine we run into that low, then look for bears trying once, bears trying twice, and the ideal scenario there will be that trap entry. Again, I use traps strategically because I don't want to get caught buying high. Right? I do understand there's a lot of momentum right now, but I want to try to buy as low as I can. One thing you'll notice is if you get in the habit of buying up into a level of resistance, you'll oftentimes get the move in your favor, but then you'll have to kind of absorb this deep pullback, right? So it's never fun to see a trade go in your favor, stop you out, and then run without you again, right? That kind of, stop and run or stop and go is really painful. At least it was for me as a new trader. So whenever I find myself kind of tempted to buy into these highs, I try to avoid that problem. Again, if you buy high, you have to use a very big stop loss to be able to absorb that inevitable pullback, right? Markets don't always just keep going higher here. I know the last couple of years, they seem like they always do. But again, in a shallow environment like this, we're coming off the low of that channel. I have no problem buying it, but I want to make sure I get a good entry set up right around those lows. Get that trap low there, right, as we go sideways. And then something else to think about here. Let me get rid of this channel and kind of show you what might end up happening, right? Let's say, for example, we get a run higher here. I've marked up these lows. I've marked up these highs. You can see, right? So those are going to be what I'll start with here is off that channel, right? Make that possibly a channel high. Let's say, for example, now we make a run higher and then we start, right, pulling back. That is a spike in channel. And with the spike in channel, there are two ways you want to trade it. One would be look for that failure into pullback combination setup coming off of that low, which again, you can learn a lot more about that, and you'll see lots of examples of those setups in that free trading course linked up in the upper right hand corner. That's one way to do it. Or oftentimes what will happen is the market will go, let's say, for example, right, it'll go up and you'll get this really deep pullback, right? This really deep pullback after we get 1, 2, 3 tops on that channel. So again, I'm buying the low of that channel, and then later on in the process, look for that deep pullback. It's usually down around the base of that channel, and that's where you can do it again. Right now, this one, I like to use the nested entry, the nested failure. So bears try once, bears try twice. And again, a lot of this is because of the strength of this pullback, right? It'll be very strong. At that point, though, once those bears have tried twice, now you got them right where you want them, and you can buy into stop losses as we go. So again, I'm looking for failure patterns, right, into pullback combination, the first pullback. And then later on in the move, if we get really lucky, right, we can find that nested failure later on in the move. And then obviously, if the market really does want to push, right, if it does really jump higher here, what I'll do is I'll adjust that channel at the highs, at the lows, and again, that failure, right, into pullback combination, right, coming off of that low. Or if we really get lucky, we get that run up, that shallow pullback, that higher high, and we get that trap, right? Traps are always going to be, right, your best entries here. So watch out for that strong move up, that shallow pullback, that higher high. Grab that trap, and again, extra bonus points for you if you can grab it off the low of a new bull channel. Where are the buyers trying to go right now? The buyers are trying to get to that 1758.2. What they really want, though, is this 1774 area. That's the big kind of the granddaddy target there overhead. And then, of course, how about the bears, right? How would I sell this market right now? Well, we're not at much of a turning point here at this point. In fact, we've got this big range from yesterday, so it's a little bit tough to tell how far this market wants to keep going higher. If I was to measure the amount below the range, you can see there's plenty of space for these buyers to keep running this higher here. So I'm not really in a great spot right now to pick a top on this market. What I would be interested in doing, though, is waiting for that 1, strong move down, 2, hold the pullback, and 3, jump off the moving average. That 1, 2, 3 reversal pattern, I can mark up that low, I can mark up that high, and I can now get excited about selling short off the top of that channel. And again, I'm not just simply selling the top of that channel. it'll be one of those, bull traps, right? It'll be a buyer failure into a bearish pullback combination, right? Into strength moves going lower. I cover more details on all those specific entry triggers in our free trading course. You can grab a link and a copy of that course in the upper right-hand corner. The objective is to get back to retest those lows, right? 1723.2 is an easy magnet there for the bears. So guys, at this point, I think we're pretty much covered it. I'd love to get a pullback on the gold. That'd be my ideal scenario. Do we go sideways? Do we keep on pushing higher? No matter what we get tomorrow, we've got all three of these scenarios all prepped up and ready to go. The only thing we need now is our trade room. Tomorrow morning, we open up our trade room every day, Monday through Friday at 8 o'clock Eastern time. I would love to have you there, right there with me. We'll trade this stuff together. Anybody can read a book or learn about trading on the internet, right? But going out and actually doing it is where the hard part comes in. That's why we get together every day and we do it together in our trade room. 8 o'clock Eastern time tomorrow morning. You can get registered. I'll put the membership link in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys right below me on the trading blog. So grab that link, hit that button, get registered for tomorrow morning's trade room, and I'll see you there at 8 o'clock Eastern time. And don't forget, you can always call the office. I would love to take the call, answer all your questions, help you get registered, or at the very least, help answer some questions so you're doing everything the right way the first time around. Don't be afraid to use that live chat on the left, live chat on the right. Call that toll-free phone number or drop questions in the comment section below. And I hope by now you subscribe to our YouTube channel. I hope you'll also hit that like button. And also, don't forget to share this video with a trading friend of yours, because everybody can benefit from this three-step strategy. But that is it for me tonight, guys. Hope you enjoyed the video. Hope I'll see you tomorrow morning at the opening bell. If not, come back and see us again next time for tomorrow night's edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.